The Morgan Report with David Morgan. Discover how to build and protect your wealth at themorganreport.com.
David Morgan of themorganreport.com for the week ending 5 September 2025. Well, this weekly perspective, I'm going to start on LinkedIn. I have a fairly solid following on LinkedIn. I don't write articles there very often, but I did write an article, you could call it. There was some feedback on X, couple good friends, respect them both highly, talking about, silver manipulation and let's do a debate. And I wrote one of them and said, look, I'll do the debate on the condition that my overall view is acknowledged. And my overall view has been this from the start, and that is the long-term trend cannot be manipulated. But within that trend, certainly the price or the action in the marketplace can be controlled. And for that, and that was acknowledged to my memory as, favorable, okay, continue type of thing. Or maybe not. Regardless, I decided to set it out in, let's say more or less a point-by-point basis, which is what you're looking at now, with citing different citations all along the way. So I'm not going to read it all to you, but exhibit, A, B, C, D, all the way through F. Then I get into, I think, the heart of the matter. So first of all, as I've said before, and I say it again, gold and silver are manipulated. It isn't some fringe conspiracy. It's a fact proven in the courtrooms. Traders at major banks have been convicted of spoofing. Fines have been paid, and people have gone to jail. Now, some will argue that spoofing isn't manipulation. It's just a trading strategy. To me, that's a word game. If someone breaks into your house, do you care whether it's called trespassing, burglary, or alternative property usage? Of course not. The point is your property was violated. In the metals markets, your wealth is being violated. Let me be clear. Manipulation can't change the long-term trend. Silver is scarce. Industrial demand is rising. Currencies are being debased. Over time, the truth comes out in price. What manipulation does is change the path to that truth. It shakes out weak hands. It discourages new investors, and it creates volatility. It makes the public think silver is risky. So if you've ever felt frustrated buying, holding, and then watching the price get slammed, you're not alone. That's part of the design. But the antidote is knowledge. So once you recognize the pattern, you can stop worrying, stop being a victim, and start using it as an opportunity. And the last thing I'll say is I think some people go overboard on the manipulation card, and they play it on everything, making up for not taking a disciplined approach to the market, maybe borrowing to buy, maybe being over leveraged, maybe having unrealistic expectations, and on it goes. None of us have all the answers. But again, I did take the time to look this up and take, a fair amount of effort. So this is on LinkedIn. If you're not familiar with on LinkedIn, you can find me there. I'm not hard to find. And you can see my, I think this will go to my page here. I put serious investors in a calm and focused position. And if you are a premium member or have been in the past, we're making a deal for members. And also, the documentary will be coming out. I'm getting the final today or tomorrow, this weekend. And I'm going to go through it and probably have it posted, I think, as a courtesy to all the people that have supported me for these last 25 years, that I will give it the preview to all the premium members, the paid people, and then next probably send it to the free mailing list, which is substantially larger. And it will be free. I mean, would like to get something back on it, and there'll be the opportunity to donate, but you don't have to. And so that's the approach I'm taking at this time. I'll leave it at that as far as the manipulation article is concerned. All right, well, let's move on to the Twitter post for the last week. If you don't follow me closely on Twitter, as you know, it's at SilverGuru22 right there. And I'm not going to read them all to you. This one's interesting. Bob Coleman just posted this up. And the premise is, if you'd bought gold, silver, the S&P 500, the Dow, when the gold window was closed, August 15th, 1971, how would they perform? And gold was the leader. And I'll open this up where you can see it clearly what the percentage gains are here. So gold's really outperformed quite a bit over the S&P 500, which has outperformed the Dow, which all three have outperformed silver. I do think silver will catch up and, and perhaps even surpass gold, but that's a topic for another day. So coming back to the Twitter feed, this is one I just reposted from Financial Sense. Jim Poplava and I have a long relationship. I do with Financial Sense in total, but he's the founder of it. And he just gets great guests. And it's really, there is a free service, which I posted here. The bottom line, I have not listened to this whole thing, but and I've talked about this before, the rotation alert. And this is where you really get into the last phase of the commodity sector, and primarily the top tier, which is the monetary metals. This is when people, especially, let's say the smart money, as it's referred to, starts moving out of the stock market, which has been happening for quite some time, actually. Buffett being the most notable, moving into cash and moving where? Well, Buffett's never going to tell you he's buying gold, and maybe he won't, but he certainly likes the silver market. And the situation is that we're going to see this rotation moving out of stocks and bonds and into hard assets. And that's the gist of what's going on here. I'm sure it's worth the listen. I'm going to finish up after this, listening to the end of it. So I do post more probably on the PGMs than most on Twitter, but I try to find something every week that's relevant to the platinum group metals. And I do a lot of reposts here. I mean, many of these were reposts. This is from mining.com. Lots of things from other people and sources like Reuters, the mainstream as well. I did an interview here, which you can find on a generational breakout. And of course, you can get it here on Twitter. This is one of my favorites, showing the power of real money. Burger and fries are 50 cents when paid in silver coins. Got a few nice feedbacks on that. And here's one that I want to bring up. This is another one I wrote. And this was an article that I felt compelled to do because there's a lot of going on about silver becoming a critical metal, which it has, according to the United States Geological Survey. There are people on the other side saying it's really not very critical and certainly not strategic. But I know from my old age that the Silver Eagle, or really the legal term is Silver Liberty, but everyone refers to it as a Silver Eagle. That program was started from the United States Strategic Stockpile. And here it is. It was the Defense National Stockpile, sometimes referred to as the Strategic and Critical Mineral Stockpile, accumulated millions of ounces of silver and other materials. And I'm not going to read the article to you, but the Liberty Coin Act came in 1985. They started minting in 1986. And I think most of you know a fair amount of the story. One that's kind of comical to me is that when that law was passed in 1985, it required to use the strategic silver stockpile. And if it ever ran out, which obviously it did, then we had to buy domestic mined silver, which was a joke because there was nothing close to enough silver being mined in the United States to support even something as small relative to the total silver market to produce enough Silver Eagles to meet demand. And so the law was changed to go ahead and get silver from anywhere needed to keep the program going. And to go a bit deeper, there have been times when the demand has exceeded the supply. Bix Weir and others have gone into this, multiple times. I'm not going to make a big case out of it. To me, when the Eagle premiums were like, 40% or something in the ridiculous level, the mint wasn't charging that. The mint was charging their standard markup, which whether it's by the book or not, I'm not going to get into, but the dealers were taking advantage of the market. The market has, and treating them like a semi-numismatic coin because 40% is ridiculous. But people are buying them. I was suggesting to my readers that you might look at, silver maple or something from the Australian Mint or silver rounds or silver bars because at the premiums always come back to a more reasonable status eventually. And if you have some patience, and that's why many of the dealers were buying them back so quickly, because they were paying, 20% and turning around and selling the same thing hours later, minutes later, for a bigger premium. So sure, I'll pay you a big premium if I know I can offer a bigger premium. Anyway, I'm going too deep on that topic. I just want to finish off with realistic expectations. One of the biggest mistakes I see in the silver space is unrealistic expectations. People hear about manipulation, they hear about shortages, and immediately think silver is going to $200 an ounce next week. And that's not how markets move. Precious metals, especially silver, tend to trade in stair steps. You'll get a sharp rally, then a brutal correction, another up leg, back down. Over time, the stairway's heading higher, but it's never a straight line. I've been around long enough to see the wave after wave of new investors get burned because they expect parabolic moves overnight. And then when silver doesn't cooperate, they quit right before the next leg up. I coined the phrase, silver will scare you out or wear you out. You will see these parabolic moves from time to time, and then it'll go sideways to slightly down or slightly up over a long period of time. People just get worn out and say, I'm done. And then they sell out and the next big move happens. That's why I want to emphasize patience and discipline. Silver is not a lottery ticket. It is wealth insurance. It is a hedge against monetary corruption. And like any insurance, its value isn't just in the payout, it's in the peace of mind of knowing you're protected. And that's where allocating the correct amount comes in. Go all in or borrow money, get over leveraged, or buy the wrong type of silver at the wrong time, then you may be distressed. And really, my message is freedom first, but honest money second, and that you need to approach it in a, let's say, with realistic expectations and in a realistic manner. And that's why I stress dollar cost averaging for most people. It takes away a lot of the stress and timing that come into the market. And if you buy over a fairly good period of time, your average price is usually going to work out well. So let's set your expectations realistically. Silver can and will move higher over time. But the real win is holding through the cycle and not timing it perfectly. I'm going to leave it there for this week's Weekly Perspective. And by the way, if you are on my Twitter feed, if you want to go ahead and ask questions in there, I don't read it. I'm not on here that much, but I do look at it. So if I catch your question, I'll try to answer it. If it's a good one, maybe I will do one a month kind of thing, not one question a month, but one weekly update. And all I do is answer questions that come from Twitter. I'll try that for a while. I'm just shouting it out here now, see if it works. If I end up missing, too many questions, people get upset with me, then probably not do it anymore. But let's try that for a while. So go ahead and ask your questions of me at SilverGuru22 on X, and I'll try to collect them. And then, like I said, every 3-4 weeks, go ahead and answer those. So until next week, this is David Morgan signing off.
The U.S. government debt is about to cross $37 trillion. That's not a typo. That's trillion with a T. Tariffs are being used to try and even the playing fields. Global supply chains are shifting. Inflation isn't going away. And the value of your dollar? It's quietly being drained while no one is really talking about this. The truth is, we're living through the early stages of a financial reset, whether anyone wants to admit it or not. And if you're still relying on mainstream headlines or financial advisors who just tell you to write it out, you could be blindsided when things really shift. That's where the Morgan Report comes in. For over 25 years, David Morgan has been helping investors cut through the noise. He tracks what actually drives markets, from precious metals and mining stocks to global debt and monetary policy, and show you how to protect and grow your wealth when the system is under stress. This isn't just about gold and silver. It's about having a clear-eyed view of where things are headed and making sure you're not caught off guard. The Morgan Report gives you real research, honest analysis, and strategies you can act on, even in a world of rising debt, unstable currencies, and economic uncertainty. Go to themorganreport.com today, download your free report, get informed, get ahead, and take back control of your financial future. Themorganreport.com, because $37 trillion in debt won't